Internal Revenue Service IRS tax news. Do's and don'ts for taxpayers who get a letter or notice from the IRS. Do not have a heart attack. Do stay calm. Do not have a stomping tantrum on Mother Earth's face. Do continue attempting to be the nicest person who ever walked the face of the earth, or at least the nicest person who ever stomped on Mother Earth's face, which is pretty much the same thing. Anyways, I pretty much made those up. We're going to go back to the IRS recommendations down here. The IRS Tax Tip 2021-52, April 19, 2021. The IRS mails letter or notices to taxpayers for a variety of reasons, including if they have a balance due. So obviously, if they think you have a balance due, you might get a letter saying, you owe the IRS money, and they're suggesting that you pay them. And they have a variety of ways that you could do that. And they are due a larger or smaller refund. So if you got their tax return, if you sent in the tax return and they picked up an adjustment, how would they do an adjustment to your tax return? Well, many of the documentations that are going to you to make the tax return also go into the IRS. The IRS has the W-2s, they have the 1099s, and therefore it's quite likely, given that information, even without possibly even much manual looking at it, the machines, in other words, can kind of line these things up and determine whether or not there's kind of some difference between the documentation they have, 1099s, W-2s, and whatnot, and what was reported on the tax return. In that event, they may recalculate the taxes owed or the refund due, give a letter to see if you approve or agree with that, or if you want to basically contest it in some way, shape, or form. The agency has a question about their tax return. So obviously, if the agency has some kind of question, they may send you a letter. Typically, the format that they will contact in will be by letter, then giving you some correspondence. And just keep in mind that this is kind of a normal process for the IRS, because you could see the bureaucratic process as they do this, right? They send you a letter, they give you a certain amount of time to respond within that period of the letter, 30 to 60 days or something like that. And then they continue on with another letter going forward. So that's why the normal process for the IRS, they kind of like the mail in this way. So it's usually not a really rushed type of thing. Like if you're looking at a spam type of thing, people are going to text you or email you saying you got to do this right now, or there's going to be some kind of consequence happening. The IRS is typically going to be a longer, slower thing. You want to make sure that you respond to them within the time frames that they provide, and be in communication with them for it. So they need to verify identity. So possibly if they need to verify identity, you could get a letter there. The agency needs additional information. So obviously if they want more information, they may send you a letter for that. The agency changed their tax return. So if there's a change to the tax return, and that change to the tax return could result in some kind of change in the refund or the amount due. Once again, what will happen is they recalculate the tax return possibly based on the information that they have, and then ask your approval, because you have to basically agree to it. That's part of the way things work here. And if you do not think their change was right, then you can argue against it. If you do think it was right, then typically they'll make the change for you, and then you can accept that change and go forward from there. So here are some do's and don'ts for taxpayers who receive one. Don't ignore it. So you don't want to ignore the IRS typically, because if you start to ignore the IRS letters, the first one you're going to get kind of worried about, and then they'll keep coming. And then you'll get more comfortable with ignoring them because they'll come like a monthly or something like that. That's how the IRS works, right? They're going to work in a very slow kind of pace, sending you a letter typically every so often. But if you ignore them for a longer period of time, then at some point they will take action, right? And so you want to make sure to be in good standing with the IRS, so that when you do have to do something with them, even if you can't pay the tax at this point in time, you want to respond to the letter, you want to sign up for the installment agreement, because if you could do those types of things, then when you do negotiate with the IRS, you're in better standing to do so. If you ignore the IRS, then they'll typically be in worse standing. It'll be harder to take action in the future. So most IRS letters and notices are about federal tax returns or tax accounts. The notice or letter will explain the reason for the contact and gives instructions on what to do. Don't panic. So see, this goes pretty close to my don't have a heart attack thing, right? Panic kind of leads to the heart attack. So don't panic. The IRS and its authorized private collection agencies generally contact taxpayers by mail. Most of the time, all the taxpayer needs to do is read the letter carefully and take the appropriate action. So remember, Normally, the IRS is going to send the information by mail when they are contacting with the normal kind of communications, and it will be that long kind of slow process. So you should have the time to respond to it, and you want to make sure that you respond in the appropriate ways, but it's usually not going to be what you would expect from like a spam type of situation, which would be something like an email saying, give me this thing by tomorrow, or, you're going to lose out, or, we're going to come after you or something like that. The IRS is usually going to be a slower kind of process. They send you the letter, this is the change we made or something like that. Do you agree with it or not? And if you ignore it, then it could build up from there, and penalties and interest could build up. And at some point, then they may take, kind of collection type of action. So do read the notice. If the IRS changed the tax return, the taxpayer should compare the information provided in the notice or letter with the information on their original return. In general, there is no need to contact the IRS if the taxpayer agrees with the notice. So normally, it's a pretty straightforward process. Like if you just missed a 1099 because you didn't have it, like from the bank, and let's say it was a small amount, like, they added, $10 on the 1099 from the bank or something like that. Well, then they'll pick it up because they didn't have it on their side. You'll check it to your records and say, you're right. There was that I didn't get that 1099 from the bank, and they make the adjustment, and you don't even have to do anything, which is nice if you agree with the adjustment they have. Now, obviously, the change could be a lot more significant. It could be something that's significant to you. It's rather than a $10 amount of interest, kind of change. But again, the idea is that you're going to check it to your records and say, is the change they made right? Did I put something wrong on the W-2? Did I miskey what was on my W-2 into the system? And they have the W-2, and they said, hey, you put in $40,000 in box one, and it should have been $50,000. We've got the W-2 over here. That's what our W-2 says. If we check our W-2 and it says that, I just miskeyed and I put $40,000, it should have been $50,000. Well, then, there's not much we can probably do. We're probably going to have to agree with it at that point. It wouldn't make much sense to argue it. We're probably going to lose in that case if we were to try to argue that position. If there was something wrong with the 1099, meaning we're saying, that's what the 1099 said, but it's wrong. It was a misgiven 1099. Well, then we might need to take action or, correspond with the IRS from that point forward saying, hey, look, the documentation that you have on your side is wrong. But most of the time, like the normal changes, and note that these types of changes, if you miskey like a W-2 into your system or a 1099 for interest or something like that, the IRS will typically pick it up because it shouldn't even take really much manpower over there to do it. Their computer system should be able to basically take the W-2 information that's been provided to them on your behalf by your employer and match it up to what you have given them. So, that's why you don't have any kind of really leeway with the W-2 type of form in terms of if it's wrong, they're probably going to pick it up and be picking it up pretty consistently. And if they are, then if you agree with the changes, then you probably have to agree with the changes would be the best step. You're not really going to win an argument unless the W-2 was wrong. So do respond timely. If the notice or letter requires a response by a specific date, taxpayers should reply in a timely manner to minimize additional interest and penalties, preserve their appeal rights if they don't agree. So note, when you respond timely, even if you can't pay, if you say, okay, they made this adjustment, I don't have, it's a big adjustment that went not in my favor, let's imagine, then I don't have the money to pay it. Then you still want to respond. You don't want to say, okay, I'm just going to ignore this. There's nothing I can do because I can't pay it. Best thing I can do is, ignore it. No, that's not the best thing, because if you do that, then you're going to accumulate penalties and interest. You want to respond to the letter typically, say, hey, look, I can't pay it. And then they're going to say, well, let's put you on an installment agreement or something like that, where then, again, you can be in good standing. If you're in good standing, then you have more rights in terms of typically your argument with the IRS, like appeal rights and things like that in your negotiation for a payment plan or payment plan types of terms. If you stop communication with the IRS, then they're going to be, less trustful that when you set up a payment plan or things like that, and it might, limit your ability to try to see if you can waive penalties and interest and that kind of thing. So typically, you want to be in the good standing, usually is in your best interest, so that you can minimize penalties and interest and be in a better negotiating position with the IRS. So do pay amounts due. Taxpayers should pay as much as they can, even if they can't pay the full amount. People can pay online or apply the online payment agreement or offer in compromise. The agency offers several payment options. So here's the one where they have a lot of payment. They have a lot of payment options. You can pay them in many different ways. But the point here is that if you do owe money, a lot of people would tend to say, hey, look, I mean, I can't pay that. It was a bad year last year. I can't, the taxes, I can't pay the taxes. So I'm just going to ignore this thing and possibly even, be angry about it. The IRS I owe the IRS money and I'm just not even going to talk to them. And I understand that feeling, but you're trying to avoid penalties and interest here typically. And so the way you're going to do that is not to ignore the IRS, because you can do that for some time. It'll start to feel like, I can ignore the IRS forever. But at some point, then they'll start to take action. And by that time happens, penalties and interest could quite possibly have built up way more than they could have before. And again, your negotiating power at that time will be diminished. So the sooner you contact them, the better. And note that these payment options, you don't have to actually talk to anybody to set those up. And even the installment agreement, if you cannot pay, is usually something that you can basically set up kind of online, and you can put your terms. It's basically a negotiation agreement on that installment agreement. You tell them, hey, this is how much I'd like to pay you monthly, and they can agree to it or not. And as long as you're in communication with them, then things slowly roll forward. Interest and penalties might come up, but the collection action is unlikely to take place as long as you're in the process of some type of communication with them usually. So that's the general idea, respond, do the best you can with it. So do keep a copy of the notice or letter. It's important to keep a copy of all notices or letters with other tax records. Taxpayers may need these documents later. So you want to keep the letter. You want to give it to your tax professional at the end of the year, even if it's something like, they changed some minor thing, or they changed, say your W-2, it was miskeyed or something like that. And you say, yeah, they're right. I agree with it. No problem. That's fine. And then you go forward. Well, now they made the change to it. But that change actually means that the tax return that's on the record after the adjustment is different than what you filed. So when you file your next tax return next year, that change could have an impact on your estimated tax payments, and it could have an impact on other kind of things that roll forward from the tax year from one year to the other. So make sure that when you do your tax return preparation in the following year, or you have your tax preparer do it, that they have the information of the change, so that they can see any kind of impact that, like if you had a refund that was applied to the following year or something like that, and then the IRS changed the amount of the refund, well, now your payments for the following year are different. So you want to make sure that you take that into consideration when you do your tax return in the following year. If you have tax software that pro formas or rolls forward, then you want to see, well, what's going to be the impact of this change that the IRS had in the tax return this year to the tax return that happens next year when I pro forma or roll over my information from this year to next year, like in the software. Do I have any carryovers that will have an impact? This will have an impact on. So do remember, there is usually no need to call the IRS. So the IRS, like most businesses these days, are saying, like, don't call us, please, because like we put everything on the website and we don't really want to talk to anybody. And that seems to be the way things are going here. But if a taxpayer must contact the IRS by phone, they should use the number in the upper right-hand corner of the notice. So if you go to the IRS website, there's going to be a ton of contact information that you can get there. But the quickest way typically is going to be responding to the letter, because that's going to take you to the place where you need to be, right? Whereas if you just call the general line number, you might bounce around a bit before you get to the place you need to be. So you want to look at the letter in order to get your contact information. Unless you think the letter is spam or something like that, then you might want to go to the IRS website to kind of double check that this is a legitimate letter and whatnot. So the taxpayer should have a copy of their tax return and letter when calling. So you want a copy of your tax return when you call, because the IRS might try to confirm your identity by asking you questions about the tax return and or the letter in order to verify that you are indeed you, so that they can talk to you about your stuff. So typically, taxpayers only need to contact the agency if they don't agree with the information, if the IRS requests additional information, or if the taxpayer has a balance due. Taxpayers can also write to the agency at the address on the notice or letter. If taxpayers write, they should allow at least 30 days for a response. Now notice, So again, you can call the IRS to respond. If you don't agree with something, you can call the IRS and respond. If you respond by letter, then the correspondence continues. So notice what happens here. If you do not respond, they will continue sending you letters until eventually, if you owe them money, they take collection action in some way at some point. If you call them, then that might be the fastest way to kind of get somewhere, but it kind of depends on who you get a hold of in terms of how you're going to call if you have an argument against it. If you send them a letter, then that's going to be a slow process. You know, they might not agree with the letter, but again, as long as the letter is in process, then you might accumulate penalties and interest, but because you're in communication, they probably won't be taking collection action because now you're in communication. You're arguing with the point that they have at that point in time. So keep correspondence in some way, shape, or form. If you owe them money, it's in your interest to pay the money as much as you can to avoid the penalties and interest or set up the installment agreement typically. If taxpayers write, they should allow at least 30 days for a response. To avoid scams, the IRS will never contact a taxpayer using social media or text messages. So if you get like a Facebook message from somebody from the IRS, is like, we wanted to Facebook you, face message that you owe us money, that's probably a scam. But if you think that it could be legitimate, then you want to go to the IRS website, the source, and check out your account there. Log into your account, check it out, and verify. Trust but verify. The first contact from the IRS usually comes in the mail. Taxpayers who are unsure if they owe money to the IRS can view their tax account information on irs.gov. There's a link to the tax account information here. More information can be found in these various links below, including understanding your IRS notice or letter, tax topic 651, notices what to do, tax topic 653, IRS notices and bills, penalties and interest charges, tax topic 654, understanding your CP75 or CP75A notice request for supporting documentation. There's links to all that wonderful reading material here. There'll be a link to this in the description.